Some of the sharpest trader out there doesn't just wait for a massive market move to make their money. They build their wealth 1 minute at a time. So what if I told you there's a real secret? The consistent daily income isn't about catching the huge once a week swing, but actually profiting from a tiny 1 minute price move that almost everyone is ignoring. The strategy called scalping, as you know, it's all about turning a few seconds of volatility into reliable income streams. So stick with me in this video. I'm going to show you, I'm going to break down a 3 simple steps method that lets you profit from these tiny flutters in the market that most people don't even see. So if you're tired waiting for this perfect trade that never seems to show up, or maybe you're just sick of getting stopped by the sum of the wild out there of the nowhere move. If that sounds familiar, it's probably because you are playing the wrong game. Most of the traders obsessed with hitting the some home runs. They're waiting for that one big trade. They're made the entire month, but honestly, it can be that much of a stressful move, and usually they get hit by the stop loss. But the key consistent income isn't about hitting the home run; it's about hitting the best hit over and over again. It's about stacking up those small, steady gains that quietly build you a significant profit. See, you now you out there finding the big obvious moves when the real money is often being made in this so-called noise everyone else tells you to ignore. So today we're going to flip the screen. I'm going to teach you how to think less like a typical trader, more like a money maker or market maker, exploring that 1 minute volatility. Believe me, I've been there for years. I was stuck on the same loop, trying every compliant indicator guru strategy out there. My account was a roller coaster. It wasn't until I stripped everything back and focused on the brutally simple rule-based system that things that finally started to kick in. I took the emotion guesswork out of the frame, and that changed for me almost everything. And look, at the strategy isn't about being smarter than the market. Is about being faster, more disciplined, and grabbing small, clean profits with a sniper-like precision. All right, let's get into the nut of the bolt. The whole strategy breaks down into 3 dead simple mechanical steps. We were going to focus on the S&P 500 ticket there, ES. It does have incredibly liquidating and just the right amount of volatility, which makes it perfect for scalping. First thing first, we only traded during the first 90 minutes after the market is open. Those of us who've been trading us perfectly like to do it after the 1 hour of the market profile has been established, so it leaves you about 30 minutes or so to implement this strategy. This is when the action actually basically hottest and most predictable. Pull up the 15-minute chart. All you need is to find every first 15 minutes candle of the traded day, and the market hits the high and low. The range of the playground for this is basically the range of the playground for today. Of course, those of us who use the market profile is TPO. Can see exactly where the price is being traded in the 70% of the time. This think of this line as a board line. This is a simple trick that keeps us disciplined and stop us from chasing random unpredictable move later on. Okay, once you got your range market and you see the market profile, flip over to a 1 minute chart. Now comes the hard part of the call it for most of the people. You just wait. You wait. Patiently watching the 1 minute candle close decisively above the range of the high, or close decisively below the range low. The close is everything. It's our signal. It's to act close above the high signal, or in a longer trade, suggesting movements momentum is picking up, close below the signal short, suggesting moment is dropping. No guessing, no prediction, no FOMOs. We let the market show the hand. Basically, it's very easy to see it with the market profile. You get yourself a frame where the market is going to be trading in the during the day. You have the low value area and the high value area. Now let's pay close attention because it's the most critical step. One of the more disciplined needs discipline absolutely more than anything. The second that you enter the trade, your risk management needs to be autopilot. You're using a strict 1 to 2 or 2 to 1 risk ratio. Means for every dollar you put in risk, you should gain at least minimum $2. Let's say you go long, your stop loss goes exactly two ticks below your entry point. Your trade profit goes exactly at the six ticks above the entry, so it makes it 2 to 1. If you go short, if it reverse, stop loss tickets basically 3 above, and the profit target ticks 6 ticks below. This is non-negotiable. Why are you going rigged? Because it's a mechanical system guarantee. Our winning trades are twice as big as our losses. There's any other deals that makes it 1 to 1 doesn't make any sense. In order for you to get to a deal, you have to make sure that basically the risk ratios should be 2 to 1 at minimum when you day trade. That means that you don't even need a crazy high wins rate to come out to be profitable. Let me show you how it plays out in a real trade. This morning, the 50 minutes opening range high was so and so. We waited patiently to 9:52 a.m. Open when the candle closed above the expected price, and boom, the entry long. We entered for a long position. Our stop was instantly placed below 2 ticks below, and the profit target was 6 ticks above. Just 2 minutes later, price range hit the target, and we were out with a clean profit. But it's let's be real, it's not foolproof. Yesterday we got a short signal when the prices broke opening low, and then we entered, and the market snapped back almost immediately, and it hits the 3 ticks stop loss. We took a small loss with the second thought because we trusted the rule to protect our capital. As mentioned many times before, the trader's job is not to trade all day, is to evaluate and his risk and handle his risk, manage his risk properly. That's what's going to give you during the market, and being consistent and let you continue and trade smartly. Just as a proof as it doesn't hit the cherry picks example, I back tested the exact strategy over and over there for last 30 trades in 30 days. The result, it was 80% winning rate. Since the winners are twice the size as the loss, the yield net profit was over 80 ticks, and the power of this having a system gives you a full-on discipline. So if let's recap the 3 steps real quick. 1, make a high and low of the 15 minutes candle. 2, stick to 1 minute chart and wait for the candle to close outside the range. And 3, enter the fixed 3 ticks stop and 6 ticks profit target. Now I need to be crystal clear. This is a skill. It requires practice and disciplines. Please do not put all single dollars that you have in real money on the line until you have hammered this outtrading simulator and proven yourself that you can exactly do it flawless, consistently. Comes with flawless execution, not from finding some magic indicator. So to make it easier for you to get started, I put together of course a whole course about how to trade when you scalp using the STPO strategy, market profile strategy. Of course, the links is in the bio. It lays out every single rule that you need to have in the right steps that you need to take while practicing. Just click the link in the description box and you can link into the course. Of course, you have 3 days completely free for free trial. If you got some value out of this today, do me a favor, hit the subscribe button, drop a question if you have in a comment below. And now stop watching and let's go practice. I'll see you in the next one.